Hello, everyone. Happy Tuesday. How's everyone doing? Survived the NYSE market breaking with some stocks this morning. That was horrible. Ugh, so frustrating. Triggering stops, triggering targets, triggering stuff, and then we're going to cancel those trades. We'll see. Good afternoon, Patrick. Hello, George. Good evening, Charles. Hey, Daniel. What's this? DJ was that for somebody else, Charles? Or do we have a DJ? We need a DJ. Why is Walmart raising wages? A lot of places they have to. So I didn't see a specific article on that. One of those cycles topping in those little spiders. We'll take a look. We could glance at that. Or you could just look at the S&P. You can just look at that too. We'll bring on Bob in a couple minutes. Good afternoon, Donald. Hey, Dr. Michael. Good evening, Anissa. Fun watching Palantir drop below 6 was fun. Well, if you're short, it was fun. So, hey. All right. We're going to get to Bob in a quick second. If you're new here, just subscribe at this point. If you've seen us more than once, there's no reason you shouldn't be subscribed. There. No signs of earnings compression. I thought Microsoft's earnings weren't that good. The only bright number in it was the cloud revenue. The DJs, the juice in the market slowly clearing out. Okay. All right, we'll get Bob's take on some stuff. Why didn't the actual numbers show up? Why is my site broken? Well, it's not my site, but the numbers are broken again. There we go. So Redbook coming in, slight miss. These S&P Global Composite Flash and Services all pretty much came in slightly better than in line. Richmond Fed was a pretty big drop from forecast on the services and the shipments index, and then we had nothing. Although API crude oil stock change was pretty big. So tomorrow we have mortgage stuff, the EIA crude numbers. We had a really nice pullback in crude, which was finally good for entries into the potential or the confirmed and triggered double bottom. So stock market map, again, Microsoft up big after hours. Sort of a mixed day today, but Microsoft causes the Nasdaq to rally after hours so far. Com services, lots of profit taking today in that. Utilities leading the way up with basic materials and industrials. Still 25 basis point, completely baked in, still in greed mode. If you were living in a cave, again, Microsoft, the other one, Capital One. Capital One was interesting because their provisions for credit losses, $2.42 billion. Huge increase. That's very, very interesting and Capital One's a big credit card. Very interesting from consumer, certain segment of consumer with credit usage entering what they think will be tons of write-offs and issues with that. So keep that in mind. Tomorrow we got Boeing, AT&T, one of the ones affected on the open this morning. Progressive, Abbott. But then after tomorrow, we got Tesla, IBM. Those are your two biggest, but most people will be focused on Tesla. I'll be even looking at CSX. So with that, are you eating something, Bob? Because I heard all this crunching in my ear. You're on, and you are eating something.
I'm eating a bag of chips.
But I'm trying to go through important things, and I hear crunch, 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 crunch.
You gotta eat.
I'm going to leave you in the green room.
I definitely got to eat. I'm gonna give the crumbs to the puppy here.
You
Puppy's
definitely,
sitting there.
I will agree, you do have to eat, but it's your timing of the eating. It was the sheer timing of your eating choice.
I think it was the food as well, because you wouldn't hear crunching if I was eating like, I don't know, gnocchi or something.
No, next time you'll bring on like carrot sticks. You know, you'll be crunching carrot sticks in my ear.
Celery.
Celery. Oh
Um,
boy. So,
I don't have a ton to add anyway, but I do want to read you guys something from FactSet to Mike's point about Microsoft earnings and earnings in general. This is from FactSet. The fourth quarter earnings season for the S&P 500 is not off to a strong start. So far, the number and magnitude of positive earnings surprises reported by the S&P 500 companies are below their 5 and 10-year averages. Overall, the index is reporting a year-over-year decline in earnings for the first time since Q3 2020. The blended net profit margin for the S&P 500 so far for the fourth quarter 2022 is 11.4%, which is below the previous quarter's net profit margin of 11.9% and below the year ago net profit margin of 12.4%. If 11.4% is the final actual net profit margin for the quarter, it will mark the sixth straight quarter in which net profit margins for the index has declined quarter over quarter. It will also mark the lowest profit margin reported by the index since Q4 2020, which was 10.9%. So to your point, Mike, earnings have been passable but not good. And it leads me to believe, especially with today's price action, I don't think it's a stretch to say that the market is still trading what it thinks the Fed is going to do. Because the indexes came back slowly throughout the day as yields fell. We actually started the morning with the 10-year yield above 350. Last I checked, it was about 345. And we're getting a reflattening of the curve to further invert it on the twos, tens. Now, the interesting part about that as well is that if you break this down and the market starts pricing in, well, they're still pricing in easing in 2023. You look at it from this, I'm not backing off, but I'm willing to admit that I may be wrong about a recession this year, simply because if the Fed is data dependent, and you saw the S&P PMIs today for the UK, Germany, the EU, and the US. The EU actually had composite and services back in expansion territory. Everything else is pretty much still in contraction, but price components for most of the S&P global PMIs were higher. Crude oil, copper, both rising, although off the last couple of days. Crude oil wasn't off much. The pullback was pretty much bought. Copper was up, though. Or did I get that mixed up? No. Copper, the pullback was bought. Crude
yeah,
oil
copper
kind
was
of stayed
bought.
at the market.
Crude pulled back. Was we were watching for a pullback into the rotation zone. And
Right.
hey, doggy.
Double.
And we got the pullback into the rotation zone. But copper's being still bought. So, are you there? Because did you mute yourself?
Yeah, I just muted so that the dog isn't. Hold on one second.
So, let me get to some more. Uh, good
All
afternoon,
right. So,
Martinez. Hold on. Hey, Pep G, thanks you for being here. Again, like the chat. Again, thank you. Let's get Bob's finishing statement. Then we have a question for you, Bob.
you got a question? Because I can't see the chat for some reason.
Bob, on December 1st, you said you don't care about rallies during earnings because we're in a downtrend. Is the downtrend coming to an end?
Well, that's as much a question for Mike, I think, as it is for me. I still don't see the overall downtrend being done yet. I don't. I don't know, Mike, if you see a technical reason to say otherwise, but
No.
I don't think we've reached any of your sort of breakout turnaround points, if I remember correctly.
Nope.
I don't think we're over on the downtrend. Again, it's hard for people to understand, Georgie, when you see the kind of like if you put the ES up, is that the ES? Yeah.
Mm-hmm.
And you see this kind of a move, right, over the last, I don't know, what is this, about 5, 6 weeks? And getting back above the 200, even though we failed against it a while back. People are always like, okay, that's it, it's over. But for me, technically and fundamentally, as I just read the data from FactSet, um, to say that the overall downtrend is over. If you remember, George, last year I was saying the fourth quarter was going to be positive. That actually happened. And I was saying that I thought the sell off, the extended sell off, would happen somewhere toward the end of the first quarter, beginning of the second quarter. We're not there yet. So, in lieu of that sell off, what is going to happen? Well, we've talked about this before. Stock market is the one market that generally has an upward bias. So, if nothing else is going on, it's likely to rally. So, and I still think that, one of the things I keep questioning, and Mike, you can chime in if you want, is the old adage of don't fight the Fed is not being believed right now, or any central bank, really. Don't fight the central banks. Currently, it's exactly what markets are doing. There does not seem to be much consensus belief that the Fed, the ECB, the Bank of Canada, the Bank of England will take rates higher to a terminal rate and then hold them there. Most markets are still pricing in cuts, especially in the US in 2023. Personally, I see that as fantasy, but I'm open to being wrong about that as the data comes in. Now, at the end of the day, how do central banks cut rates when labor markets have not suffered yet, at least as per the data to this point? Especially in the case of the US central bank, where their dual mandate is price stability and full employment, and they have one, but they don't have the other. On top of that, services inflation is sticky. Goods inflation was collapsing. And what do we see over the last couple of weeks? Crude oil rising, copper rising, and commodities are starting to rise again in the face of services inflation that is not going anywhere as of yet. So, what happens if we start seeing inflation data moving up more rapidly again? As we've mentioned time and time again, we've only had one instance where inflation actually was a negative. And that was the last reading on CPI. We don't know on PCE if that's gone negative yet. So I don't think that the overall downtrend is over yet. But one of the psychological things that happens, George, it's a new year. So everybody looks at themselves as being at zero, not being down 19% when you include last year minus the rally we've had so far this year. People don't look at it that way. So even the legacy financial media, which is just becoming worse and worse every day, is like, tech is absolutely screaming this year, up however many percent it is. I haven't even looked. Like they're specifically pointing to the Nasdaq Composite, which is the futures, right? So if you look at the Nasdaq Composite, let's go to a monthly. I'll be able to tell you really easy how much it is up this year. I'm looking at mine, Mike. You don't have to change yours if you don't want. So far this year, it's up 6.7%. And there are stocks on a tear. Tech is up almost 7%. But again, when you look at where it was last year, tech was down, I don't know, what was it, 14%, 15% last year? It was down a lot. So anyway, that's a very long answer to what was probably a pretty short question.
Hey AF, are you guys trading every day? Don't we trade when there's setups?
Yeah, trade when there's setups.
I mean,
So I stand corrected, Mike. If you look at the Nasdaq, I'm sorry, if you go from the open in January, the Nasdaq Composite futures are down 32%, and the legacy media is all back on a tear.
yeah,
Okay, sure. I guess it is on a tear.
it's not just with the legacy media. It's even with stuff, I'll see something scroll. It's almost why I don't bother looking at them anymore. Like Zero Hedge sometimes. Crude to the moon, and you're looking at it and it's up 0.25%. And it's like, what? What's your gauge to the moon? Or, it's this or that. It's all this crap that's celebrating, everybody. It's still, once people stop asking, again, Dimitri, hi, Americans, so the bear market is over.
I
When
mean,
everybody stops asking that, we'll be closer to it being over.
exactly. I agree. It'll definitely be closer to being over when people stop wondering if it's over.
Okay, and I'm going to say we can stay in tactical trading mode for 2 or 3 years. There was a ton, if going back and even studying, I was not trading in the 70s because my parents, when I was 7, would not grant me a trading account, nor should they have. Uh, but what I've done is massive studies of price action from as much data I can get my hands on. Stuff stayed in tactical trading mode for many years in the 70s. Okay? We can stay in that. Remember, even in the bear markets of the .com bust, we had multiple 20% rallies. 20%. There was over a 40% rally in there before a rollover play. But everybody's like 7% bottoms in. Yay! Yay! You know, it, uh, we're in tactile trading. What do I keep preaching? If we get a buy signal, which again, there was one triggered on Friday, percent B and a rotation zone buy signal. It's in trailing mode. Let's say something happens and every tech company from now on blows out earnings, and all of a sudden it's in trailing mode and we take out 15,000 in the Nasdaq. Could we go to new highs? Sure. Guess what? It's in trailing mode. If we roll over next week, Apple releases something disastrous and the Nasdaq tanks, 1,000 points. It was then taken out of trailing mode. Stop hit. It's tactile trading. If we get the probabilities to shift, either through a long-term system, which has not shifted, or just through one of these more medium-term systems, which we get a key harmonic level getting broken and closed above, then we may be going to new highs. May. There's no guarantee. Even on long-term systems, as I follow, highly reliable is not 100%. I've never found, unless it's a very limited data set, something that's 100%. But on a very limited data set, the next data point, because it's a limited data set, could drastically change the probabilities if it's a miss. I don't know what to tell people. You trade what you trade. Would I go into and take my portfolio, slam it all into long-term investments and walk away for next year? No. Other than that, if there's trading opportunities, there's trading opportunities. If you don't trade short term, you watch for the medium term. Like we get double bottoms, we get double tops. They're tradable on a swing basis. But it doesn't mean I'm going to get married to the position.
Right.
Sorry, I get asked this all the time, and I just want to tell people, if you want to go buy, go buy. I don't care what you do with your money. I'm just trying to teach something. And look, from many perspectives, the bear market's not over, especially from a valuation perspective. I mean, people chasing Microsoft higher with what I consider not a very good earnings report, when Microsoft's already trading at a still steep PE multiple in a bear market. Even from a fundamental, and I will look at fundamentals, but I'm not going to explicitly just trade them. But going into this report, you had a PE ratio of 26, which is not cheap for a Microsoft. Yes, they could still grow cloud revenue and other stuff, but they're not growing 40% year over year, 30% year over year. But everybody, from my perspective, was still looking, they didn't have a horrible report, let's just buy it. And that's still the market we're in. This thing could be rolled over in 2 weeks again. I'm going to be watching, hey, let's return to the 200. Might set up a topping pattern. If you're long, trail. Trail for as long as you can. All right, I'm done.
Let's address a couple of things, and now I can see the chat, Mike. And I want to address a couple of things that are on there. So, first of all, Geos funny question of the day there. You see that?
Uh, Mike Bob, you have to turn around a sinking company and pass it to your kids. Your solution can't include a buyout. Who do you save? Peloton, AMC, or Bed Bath and Beyond?
Probably Peloton.
That was my same answer.
Um, yeah, probably Peloton. That would be my guess. That's a hard one though, George, and that's a good one. Let's go to Charles, if we could, Mike.
All right, well, let me
I'm
just say
trying
hi to
to.
Nas Industry. Charles, I've
Hi,
been looking.
Nas.
Hold on, wait. He had another thing about Bob. Do you have any thoughts on the retail sector, particularly Walmart
Yeah,
announcing a wage raise in this to hang on to workers to protect a dire Q1, Q2?
it is to hang on to workers, and obviously, I mean that's what the stock jumped today and then collapsed. And it was the wage announcement that did that. But I don't. I like discount retailing if I like retailing at all.
Oh,
I don't like retail.
you can't go off the stuff from today though, Bob, because Walmart was
Yeah, no,
caught
I
up
know.
in that NYSE no opening range fiasco.
Yeah, yeah.
That was
But
so.
I mean,
These are all going to get revised, by the way. For when you see
yeah.
these bars, they're going to get. There's a bunch of trades that are going to get deleted, done because aggravate. I'm like all
I,
these things are going off. All my alerts are going off. I'm like, what? We're trading like we're in meltdown mode.
I know. Basically, the retail sector is going to be a little bit of a problem because credit card debt is rising, and we're getting to record levels in credit and consumer debt again. So you got to be careful about retail. But if I liked retail, which I don't right now, Walmart would be one of the ones. If you start looking at Walmarts and Dollar Generals and Dollar Trees again, as you end up in a situation where the consumer is starting to be strapped. So that's what I wanted to point to. Then Charles also talked about this immaculate disinflation, and I'm not sure I believe that theory just yet because right now I'm worried about seeing consistent deflation, which we have started to see, but it's only over a batch of like 3 data sets, which is not much considering how long inflation was running away with things. So there has to be disinflation first before we see immaculate disinflation. Then I want to get to a couple down there where somebody said that I what is that? Somebody said that I said there's not going to be a recession. I don't see it up here
Here,
anymore.
Bob, you
But
mentioned that we would not have a recession this year. Does that mean we have put in a
I
bottom?
didn't
Oh,
say that. I didn't say that, Paul. What I said was I'm open to a recession not happening, which I wasn't open to before. My base case is still a recession. It is. Just now we're seeing some of the weaker data come in stronger. And if that ends up becoming a trend, then I might turn that prediction around. But my base case is still that there's going to be a recession. And I still believe that no, the bottom is not in. And I explained that early on, which goes to Shashi's point, where she said that actually, I don't know if Shashi is a she or a he, to be honest. So I don't want to offend anybody. But Shashi, you must have missed the beginning of the show where I read off that earnings are not better than expected. The fourth quarter earnings is not off to a strong start, according to FactSet. The number and magnitude of positive earnings surprises reported by S&P are below their 5 and 10-year average. And overall, the index is reporting a year-over-year decline in earnings for the first time since the third quarter of 2020. The blended net profit margin is 11.4%, which is below the previous quarter and below the year ago net profit margin of 12.4. You can go back and watch the recording. I don't want to reread the whole thing, but earnings are not strong so far, Shashi. Weak, comparatively speaking. So I
and
just want to point those 2 things out.
Sterling puts in Microsoft earnings. EPS of 220 versus 231 expected. 52.7 billion revenue versus 52.9. The bright spot for them was server and cloud revenue was up 20%, which I talked about earlier. But this was not a stellar earnings report by them. But I think people are looking for
Earnings are
any
not.
reason to buy. They're still looking for the bottom's in. We're going to buy. So, not complaining. It's going to rally till it rolls over. We'll get alerted, hopefully, with some nice topping patterns. If you're long it, trail. That's my thing. I don't know what else to say, but Bob, any thoughts on Visa?
On who?
Visa. They're releasing earnings this
Well,
week.
Visa makes money, and when consumer debt goes up, it's their ability to pay it. I would watch and see if they have any write-offs, if they have any debt write-offs. I haven't seen it yet. So, I mean, obviously you want to be long credit cards when consumers start to use them, but you also want to be out of credit cards when they start defaulting on it. So there's a little bit of a juggling act there. I don't hate the chart, to be honest, but I also don't love it.
A lot of stuff, and stuff I think is still getting priced for perfection. That's the other problem. If there's any hiccup, it doesn't even have to be a big one. I'm not paying up like Walmart. We were talking about Walmart, right? Look at where Walmart's priced just from a fundamental perspective right now. P to E of 44. I don't need to run out in this kind of environment and pay up because if the consumer does roll over, Walmart's not going to stay at these levels, and there's going to be a lot better levels to buy Walmart on. If there's a short-term trade, that's different. But do I want to say, hey, I'm going to take 10% of my portfolio and slam Walmart in it and go to sleep for the year? No, because this could easily, in the next couple quarters, be much lower. So if it's in a portfolio, I'll know where the stop is. If the stop levels hit, bye-bye Microsoft. I'll see you at a much better price.
You got to understand where Mike and I are coming from on this. It's not a lot of people try to bottom fish. That's why when people ask us if the bottom is in yet, like somebody in here said, when is the crash coming or when's the dropout coming? I don't remember how it was worded. We don't look at things that way because it's a low probability way to get long this stuff, right? You're better off getting on a train that's headed north rather than getting on a train that's headed south when you want to go north, right? So you're waiting for the train to hit its end route and then turn around and head back north. I'd rather miss the turnaround and just get on the train that's already securely headed north. And if you start to learn that type of trading that Mike teaches, you'll find your position sizes going up a lot quicker because you're using risk management tools which on a percentage basis automatically slowly start increasing your position size as your account builds. So you don't want to be like taking small positions and bottom fishing just so that you can go to a party or barbecue and tell everyone that you bought the low. It's not an efficient way of doing things.
So, guys, you're seeing retail or institutional buys. It's not either or. Now, I can answer that because I'm seeing in certain stuff that's overvalued, that's being chased by retail, you're seeing more divestment from institutional players into the weaker retail hands because they're like, hey, if we can offload some of this stuff, especially stuff like NVIDIA. All right, that's something that the retail's going bonkers about again. And institutions like, look, if we'll take advantage of the rally, but come on, we're going to offload some of this stuff, especially we got tons of shares to still turn around. But look, if you're willing to pay a P to E in NVIDIA, which is already warned 3 times this year, and you're willing to pay up at 80 or even higher P to E ratio, here you go. Here you go. You can start taking it off our hands for us. So it's not one or the other. People, again, is it this or is it that? Remember, we could have people go, is it a bull or bear market? What if we now, I'm not talking the technical definitions, but what if we sit in a sideways market for literally 3 or 4 years where you get decent rallies, you get decent declines, but it doesn't make new highs? What's that? I mean, it doesn't have to be one, or you could have mini bull markets and mini bear markets in a bigger sideways. I don't even. Everybody wants to classify everything.
Mhm.
It. That's why. So yeah, am I seeing? I'm seeing still retail go into some of this la trading again, where hey, let's just chase this higher. Nvidia's going back to 250, and it's going to be a PE of 120 again. What? I'm not paying a PE of 120 and slamming that in my portfolio. If we have a trade, it's different. I keep saying the same things, but I don't think people are really getting the concept sometimes.
Right.
And that's where
All
I
right, what
get
else?
animated because people find many fantastic ways to separate money from themselves in the markets. When
I'm sorry, AB sent up here is hysterical.
what this
Yeah.
AB FBI is investigating if there's a government official who doesn't have classified documents at home. Yeah,
I love how all these 90-year-old guys take the paper home with them. They got to have a stack of papers. I mean, it's just hysterical.
it's just
Buy
a.
a burner phone, take pictures of it, you idiots.
It,
Anyway,
is it just an absolute clown show with everything these days? I mean,
it
come
is.
on, come on. That's the other thing.
All right, anything else for me, guys? I've actually got to
Uh,
go on Australian TV in about 15
well,
minutes.
you get going, Bob. You get going. Thank you for tuning in. Thanks for listening to my rants. Thank you for sharing your tips with me.
All right, I'm going to eat these while I wait now. We'll see you
Okay.
later.
What are those Cheez-Its? What
They're
are those?
Quest protein crackers.
Okay. Well, you enjoy your crackers while you prepare for Australian TV. Huh. This actually looks sort of good. All right.
Yeah, they're good. And they're still garbage food, but they're better than buying a thing of Cheez-Its. All right, guys.
Perfect. There you go.
We'll see.
We shall see you on Thursday.
I'll be here Thursday.
Perfect.
See you
Thank you.
guys.
All right. All right. There you go. Sorry for my mini rants. It's just this kind of stuff. Sometimes I'm just trying to share information, and you don't have to agree. You can disagree with me all you want, but just be wise and smart with your money. We already saw that. It took me. Thank you, Charles. Such no one to be offside in a trade. Yeah, it took me forever to learn to wait for triggers and pullbacks and then get out when the pattern finishes. Don't look back. Get in when triggered. Get out when at stop losses and the targets. Exactly. And you don't have to pick every low or sell every high. You're not going to. For example, what in the Dow? I mean, people's like, oh, I don't know if this stuff works. How many times do I outline patterns that work here? It's not rocket science, but the Dow 15-minute, all patterns hit on the double. What do you think happens here? It's the final exit point. We got the reversal. Did that mean it had to reverse? No. Was there a great bottoming signal down there? There was but this was hard to do because of the opening crap that happened. But you know what? You're not going to catch, and this is where the question was asked before. Do you trade every day? There's not a setup every day unless you're like on a 5-minute chart. There's some days that, hey, there's just like a lot of like quad witching days. A lot of times suck. So why even bother? If you're swing trading stocks or futures or whatever, there might not be setups on any given day. And even if you're trading on a 5-minute, there probably should be days you're taking off. There's not great trading every day. Even with setups I follow, there's sometimes even on very short-term charts, which I don't recommend over trading, but there's some days that just don't have setups, so you don't have a trade. You're not going to catch every move. You don't need to catch every move. You shouldn't want to catch every move. All right. So, very back and forth day to day. Now, with this kind of stuff, I'm watching, again, we saw that question earlier. Are the cycles at the top? They're not. I'm just going to go over the S&P right now. No, they're not at the top on the daily. They're getting closer to the top on the weekly. Could we have more upside ahead? Yes. There you go. It's still in trailing mode. And aggressive trailing mode is now breaking down below today's low and then following through with a close. All right? That's your aggressive. Conservative is much lower. Well, why'd you say aggressive and conservative? Because I don't know look, people trading short-term charts like I'll give you an example. If getting in on the percent B breakout followed through on the close, am I going to ride that at this point back down and have a stop below the entry price? No. You'd be insane. So is that going to be a more aggressive stop level? Yes. Let's say you got back in on this percent B buy signal. Can I give it a little more? All right, 39.14. Can that have a little more room? Yes. Why? Because we could pull back, catch even on the 200 in rotation zone, rotate back up, and this trade is still in it. But if the entry was down here, this 39.50s, I don't really want to ride it back down to 39.50 or ride it back down to 39.14. Do I? I'm going to give away all this in this kind of tactical trading market. So there's different levels and different stops. There's no one trade in the market. That's why people say, what's the trade? There is no one trade for everybody. What's your count size? What's your time frame? What's your risk tolerance? What markets are you trading? So, still 40, 50, 40, 51, 40, 52 on a rally is the next target. Then we have clusters around 40, 65 to 67. And then we have 40, 93, our upside. Key support. Now, this is where we're drilling down. What do we have here? What do we have? Everybody who's watched the channel. What's this also below? Let's go back to that daily. Double top. Could take us back to the bottom of the rotation zone. So if that triggers, okay, that's why it's a great stop level on a short term. Why? Because we could come back down here, get another potential buy setup, and trigger another long. We could come back down here and then continue to collapse. But that would give me a probability shift. So now, on a close below 4,525, just make it 4,005, because that's roughly where the rotation zone is, you got a potential double top pattern. We got a roadmap. Nasdaq. Looks like we still have a potential double top pattern. So, a close below 11,835.75 could be a pullback. So we can have on a short-term aggressive stop level, you can have a stop. On a conservative stop level, like there was a percent B breakout buy here on Friday the 6th. Do you think I'm going to do a stop here from an entry all the way down here? No. Why? Because we could pull back, catch on the daily rotation zone, and rotate back up. So this doesn't phase an entry from here. An entry, let's say there was an entry from yesterday, Does this phase it? Yeah. Big difference. So targets 11,762, 11,723, 11,698, 6,888. Returning, remember, this is a clear path move. This is a little breakout zone. Even on the 1 hour, clear path move. Look at the breakout zone. Look at the final target. There you go. Does it mean it's higher probability? No, it's actually a slightly lower probability since it's against the rotations of the higher time frame rotation zones. Dow, we had the double bottom from yesterday, or the double top, I mean, from yesterday, and we now have another potential double top. So, can all of these just not trigger? Can we just continue to rally tomorrow? Yeah. But we have key reversal, and they're short-term reversals and trailing stop levels. Why would I want to trail a stop on double tops if they're triggered? Because the probability shift for the bigger pullback. What's the bigger pullback? Not to new lows. So close below 33.74 or 474, 33,269, 33,166, 33,063. Key level, what do you think I'm watching in the Dow tomorrow? And I didn't go through all these on the other ones. You can do them if you understand the retracement harmonics we teach. 33,942. Why we get a close above there? The probabilities would also probably take the double top off the table, and we get the probabilities of returning to the highs from last week. Russell, boy, I sound like a broken, everything just trading in lockstep. By the way, if I knew the top was in, I'd be shifting these all to conservative targets. I don't know if those tops are in on the right-hand sides, so I will be shifting them. But the Russell looks like it's in, because if it rotates back up, it would turn into a triple top. Close below 1883.40, 1873.40, 1868.60, 1863.3. Again, if you were wondering on the shorter term stuff, remember you got, I mean, this would have to be done on a shorter term basis, but the close above the 62.5, where do I watch for? Return to 87.5. Look what formed the double top here. Does that mean it's guaranteed to trigger? No. But it hit the first level, the first major level. Remember, I use a 75 as a minor level. The first major level, and now we have a potential topping pattern. This rally could continue, but I have a line in the sand. By the way, this price action today did nothing to invalidate the bigger potential double top on the Russell. So, let's see where we sit. So that's what we are watching for there. DAX, still nothing fantastic here. Fascinating. No close still above that 62.5. Notes, very weak rotation buy. Well, I'm going to be watching for a retest of this 200 and then a potential more significant topping pattern, but nothing yet. Dollar index still in this very tight range. I don't think we're going to get much movement out. I mean, we got the Bank of Canada, isn't there rate hike decision tomorrow? So we could get some Canadian dollar versus the US dollar movement, but I think a lot of stuff's going to be waiting on the Fed next week. Crude, as I talked about, was watching. No, the double top is not triggered. We finally got the pullback into the rotation zone, giving even better reward to risk entry. Cycle's still rolling over. So we could even see some more pullback even without triggering that double. Gold still in trailing mode, still climbing the rotation zone. What else do we have? I'm going to keep looking at this. They're not in danger zone again, so there is no major pattern here on the yen dollar. And you can see what happened here. The double was never triggered. So clearly that pattern is off the table. Again, very patient in the yen right now. Euro, pound, There's a pound bigger setup, but we're nowhere near triggering it. Bitcoin is just trailing from a long side. Tesla, remember earnings tomorrow. Still stalling out at the second harmonic area. Nothing's changed with the targets. The next major target of the upside is 153.80. I really hope they beat earnings that have been dumbed down, because that will lead to another rally to set up for a fantastic potential short play. But nothing new really here at that point. All right. Really? Are you trying to aggravate me, Wizard? Gasso. You want gas? Oh, what do you want? GASO. I'm not sure what you're asking for. Unless you want let's see. Greetings, Dave. So, George, please clarify. Let's peek in on. I think this is going to be setting up for a fantastic. By the way, obviously the double that never triggered is off the table. So, what am I watching for tomorrow is we got gap fills and holding up around the 200, and then I'll be watching for another significant topping play up here. Not exactly at the 200, but up in this area. You want me to do gasoline futures, which I don't trade. That's sort of interesting. I want to check something there. I'd just be targeting the 1051 to about 1067. 1051 especially. That area. So that's about it. Using your harmonics, by the way, that's not let's use the harmonics, see where that took us. So 1020 was the next harmonic area. We can't really do the next thing until we get at least a decent pausing bar. So it already hit the next harmonic. So the next key area I'd utilize is this 1050 area, somewhere around in there. From the long side, from a pullback level, 975, and even into the rotation zone. As long as if you got the close back below the rotation zone, any close below 922 would shift the pattern again. Is SKX. Then I'm done. I am tired. That today's NYSE breaking really ticked me off. Did Skechers form a double top? No. What are people paying for this? Oh, that's sort of funny. Huh. No, there's no double. You have two bottoms here, 48. So you break down below that with a market rollover, you could see a quick gap fill play. Other than that, there's no great topping pattern just yet. This is not, you can see it there. That's just, it's more of a horizontal breakdown. So I'd be trading below these two lows, 48, for a potential gap fill. Yeah, gas prices continuing up. Mike, hello, Mike. Any chance you have probabilities related to the upside trades when 8 EMA crosses over to 21? I do not trade the crossover, and there's a reason. I use it as a gauge, as I used to talk about a long time ago. Is it in bullish mode? Is it in neutral mode? Is it in bearish mode? I use that as a gauge to help me stay on the right side of stuff, but I do not trade the crossovers. There's a way to trade it, a way to trade front run a crossover, which I call an ice cream trade. So there's a way to potentially trade the crossover, but you got to get in it well before the crossover. And it's called an ice cream trade. So and by tick, no. I don't mean the tick chart. I mean what broke on the friggin' open with their market open ranges and everything, and then stops hit, a bunch of stuff hit. You have there's going to be a bunch of wiped trades. All right, here's your Walmart. There you go. You think that was a legitimate bar? Here you go. If you don't know, if you weren't trading these things, they had a major opening issue today. Okay, here was your range for Walmart. Okay, you think that was a legitimate bar? No. You think these were legitimate highs and lows? No. Here was Verizon. Here's your actual stuff that went on, but here's your highs and lows: 22.84, low 15.15. AT&T. I can keep going with this crap. Get your friggin' systems in order. It was just a friggin' disaster. Your AT&T first print was up here like at 2170, and then you had the gap down to 1860. It was just a friggin' disaster. If you weren't following, if you weren't, ugh. Yeah, it is a friggin' circus. Yep. Palantir, MMM, and 3M had earnings too on top of it. Okay? You have earnings plays going into this. Look at the bar on 3M. A clown show. Absolute clown show. McDonald's, yep. That was another one. Here. Look at this. Look at this. You know, and these were literally stuff that triggered stops. That now you got to deal with your friggin' broker on it because... I'm still waiting for a proper explanation. I have not seen one either, and I've not heard from the complete resolution, because this triggered stops, triggered fill it market stops. No, it's a friggin' nightmare that now has to be dealt with. So if you also wonder why I'm in sort of a bad mood, now you know. And I'm not really in a bad mood, I'm in an aggravated mood. Because the largest stock exchange in the world, and this is a clown show. This is a clown show. We're not talking like a penny stock breaking. Sterling listed a bunch of them. Yeah, that is the question. I think that I mean, the brokers are gonna try to bust them. They have to file the forms because that's the real thing. Yeah, don't worry, the SEC is investigating. So, and it's affected a ton of people, but it's just aggravating. And a tasty Brent era show. A good cocktail. Yeah. No, it was more so that people are like, they got to fix this kind of crap. You should not have this stuff go on. Earnings seasons, opening prints on earnings season. Come on, man. Seriously? All right, I'll leave it at that. I mean, I just want an explanation because if this is another thing gone rogue or something else, but you had opening ranges that were just messed up, and you had all these trades dump on opening because openings are a process. Okay, so it was not a controlled opening. I'll love to see what really happened. And these clown shows with these exchanges are so worried about putting together more instruments. Like, let's have 1 hour options. Let's have 30-second options. Let's have this. Why don't you manage what you have now? Let's figure out a way to get retail more involved so we can take more money from them. Because you know what? Most people can't trade profitably to begin with, but we'll give them other instruments to blow themselves up on. Yay! Yay for us. So, all right. Thank you for tuning in, and I shall be back tomorrow morning if you want to tune in again. I don't know why you would. We got Boeing, AT&T, Progressive, Abbott Labs, ASML. Oh, look, Nasdaq didn't break today. It was just the NYSE. So and then don't forget Tesla after the close. With that, I shall be back tomorrow morning. You're welcome, Jacob. I'm fun. I hope some people can laugh. You're welcome. The many faces, personalities of Mike, and there's no disorder going on here. It's just me being weird. So, with that, I shall see everybody tomorrow. Have a fantastic night. I'm going to go pour a glass of wine at least and finish up with some work. Have a great night.